Welcome to this webinar. We're going to be presenting a summary on Advisory Accelerator, practical solutions that work. We'll be starting in just a moment. Hello, I'm Peter Towers, Managing Director and Founder of ESS BIZTOOLS. Welcome to this special webinar, Advisory Accelerator, practical solutions that work. SMEs are struggling and calling out for help all over Australia. There's a lot of interest in the services that can be provided by accountants. Let's look at some of the issues that your small business clients are experiencing. High interest rates, high inflation, high failure rates, sluggish economic growth, supply chain issues, especially for clients who are importing goods or services from overseas. Incidentally, if you have any questions during this webinar, can you please type them in? If you're watching on the live feed, you won't be able to do that, but you can send me an email, peter@essbiztools.com.au, and I will get back to you with a reply. If you're watching this webinar at a later time, it's more suitable for you, and you have questions, could you also send me an email, please? peter@essbiztools.com.au. According to the Australian Small Business and Family Enterprise Ombudsman, 46% of small businesses reported no profit in their most recent financial year. Nearly 75% of full-time self-employed operators are earning less than the national average wage. This is not a good position, is it, for the SMEs that are looking for guidance and for help from accountants and bookkeepers? And I'm saying accountants and bookkeepers because I've actually sat down and started to think in recent times about which other group of people in the community could claim that they are there to offer financial, commercial, management accounting type services to assist SMEs to improve their business performance. And I cannot think of anyone else. It's our profession. We've got a responsibility to the 2 million odd SME businesses. And when you look at these statistics, there's some real problems out there. Hopefully, we can help them. I think the accounting profession's at the crossroads, to be honest. Please think about it. We've got automation, which is definitely changing things. We've got AI, which is coming at us all at a very fast rate of knots, isn't it? We have the ATO digital systems are fast reducing the demand for traditional compliance work. And let's look at a couple of the comments that have been made about this. Chris Jordan, who was then the tax commissioner, but is now retired, but incidentally was a former partner in KPMG before he was recruited to run the tax office, made a comment at Xerocon 2022. Accountants should diversify their offerings and focus on becoming brilliant and trusted advisors, he said. And if your business model is high volume, low margin, focused on simple tax returns, it will not be viable in 3 to 5 years' time. Fast forward that to now, the timeline for what Mr. Jordan said was now 6 months to 30 months. It's coming at us very fast. About 6 weeks ago, I attended a very interesting series of webinars on, or video presentations on AI. And the last presenter was a gentleman called Mark Wickersham, a fellow of the Institute of Chartered Accountants. And in his "this is who I am" type presentation, as part of his overall comments, he indicated that he was a former Sydney accounting principal, sole principal in an accounting firm. He employed staff, including a couple of qualified accountants. And in 1999, he was in a rather depressed state. And he was asked by one of his friends to attend a briefing on value pricing. He decided that that was the way he should go. He sold his accounting firm, and apparently he went to London, and he now heads up an organisation called Value Pricing Academy, which has got accountancy firm clients all over the world. And along the way became an expert in AI and is a senior consultant for ChatGPT. He was a very good presenter. And if you get the opportunity to listen to him, particularly relating to AI issues, please do so. I would recommend it. But let's look at what he had to say. Compliance work as we know it today will disappear before the end of this decade, or perhaps even earlier. Now that last comment, or perhaps even earlier, was an add-on at the end of what he originally said. But let's look at it very seriously. Mark Wickersham, who is an experienced accountant and understands value pricing and AI, he's saying that the compliance work as we currently know it, as you currently know it, is going to disappear by 2030. Gee, that's before the Brisbane Olympic Games, which people in Queensland are starting to get a little bit concerned about, meeting the deadlines, etc. But he's saying 2 years earlier than that, compliance work as we know it at present will have disappeared. The question is, what are you going to do about these challenges? Now, you obviously can elect to do nothing. You can say, well, life's going on. There'll still be people wanting tax returns prepared. I'm sure there will be. And businesses in particular will still have tax returns to be prepared. But these forecasts by the former tax commissioner and by Mark Wickersham are indicating that they believe that there's going to be significant changes made, which is going to speed up the process, which is going to reduce the amount of work that you have to do. I think it's time to embrace the shift to advisory. That doesn't mean you give up the tax return or the tax consulting work, which is a separate issue, of course. But the landscape is changing, and it's not just a warning. I think it's an invitation to you to seriously look at diversifying your accounting firm. If your accounting firm's currently 90 or 95% taxation advice and tax return preparation, wouldn't it be a good start to say, well, over the next year, you're going to try to diversify that? So it might end up a 75-25 split, 75% still taxation compliance work, with an ultimate aim of getting that split down to 50-50, which some of our subscribers are achieving, so that you can diversify your activities. Please think about it. The need for proactive commercial and financial savvy advisory services has never been greater. Thinking back to those statistics from the Small Business Ombudsman, that's a lot of problems out there, a lot of people just getting through running small businesses. I think it's obvious that SMEs need assistance now. How are we going to help them? Your firm can be the one to guide them through this process, to help them on this journey of understanding that accountants can provide a wide range of services, not just taxation. And I think that's one of the real issues out there in small business land. Thousands of SMEs, I suspect, believe that their accountant is only able or only interested in preparing tax returns and the annual set of accounts. I honestly believe our profession needs to change that perception, to let SMEs know that accountants who are offering services to SMEs can offer them services along the lines of what one of their larger competitors might be receiving because they've employed a full-time accountant or even a part-time accountant. With today's technology and communications, these services can be delivered. So where do you start? If you've decided none of this is of interest to you, then perhaps you don't want to continue with this webinar because it's a serious challenge. Where do you start? I think we need to start with practical solutions that help. That's why we framed that into the name of this presentation. So the systems required in the first tranche of delivery of an enhanced range of services commences with the need to conduct a deep business analysis dive to clearly understand more about your client's business. And before you say to me you already know your client's business, do you really know it? At one stage of my career, I moved from being an employed accountant, working in a chartered accounting firm, where I'd done a wide variety of work, and I joined a public company. And within 2 years, I'd been appointed to be the Chief Financial Officer and Company Secretary of that listed public company. And what I found was that the accountancy services within organisations had to be very switched on. Management was looking for information virtually every day, what I called the what-if questions that my team of accountants and allied staff had to answer. So I had 13 accountants or senior office managers situated around the east coast of Australia who were reporting to me. And we would have to solve the problems, but also produce the information. What I knew within a few weeks of being in the head office was a lot more about how that business operated, this public company that had been operating for over 50 years, how it operated. I knew a lot more about the internal offerings. I obviously knew who had authority to do what, to commit the business, or to open accounts, or make payments, or whatever. I'd done an analysis of the risks. It wasn't as up to date as what I would hope, but we updated it. I knew a lot more about my clients than I ever knew about the clients that I'd been acting for in the accounting firm that I'd left a couple of years earlier. And I suspect the same thing will apply to you. But I'm really suggesting that what you're offering is a virtual chief financial officer, or you can call it a virtual accounting service if you like. You need to understand where the controls are, who's got authority to commit the business, who opens the buildings up, who locks them up, who is the after-hours phone number if there's a problem, security's looking for someone, fire brigade's looking for someone. So you need to drive down into that business analysis and create a file so that the team in your organisation who are working on that client can refer to it. And I think the aim should be that what you want to know about your client is 1 inch wide, but it's a mile deep. It's a complete understanding of that client. And then in conjunction with your client's leadership team, prepare the business plan. some time ago, an accountant said to me, "Oh, no, I'll just go off and prepare the business plan." And I said, "Well, I wouldn't suggest that. And I really don't. And unfortunately, I know that some business plans are prepared like that. I think it's essential that you sit down with the leadership team, and within our product packages, we have detailed checklists for you to be able to decide which ones you're using and then send them to the leadership team a week before the first meeting, so you can get their brains in gear as to what you're going to be talking to them about, because they are the people who are ultimately going to drive the success of the business. Therefore, they need to have ownership of the business plan. I've worked on probably over 1,000 business plans over the years. Unfortunately, some of them didn't work out. But the ones that definitely didn't work out were the ones that someone had gone off and just done on their own. And I'd been brought in as a specialist consultant to try to sort out that business. And I asked, who prepared the business plan? And I got a shrug of shoulders from some of the leadership team people. I said, well, surely someone knows who prepared it. Oh, we think some accountant or consultant was engaged by the boss and he just turned up with it. It was just given to us. It could have been a copy of another plan, one of the guys said to me. That's not the way to do it. So we need to understand the client's business and get their involvement, get their ownership, get their suggestions. Your role, I think, in a business plan is the facilitator, to record it, to be a bit of a doomsday merchant at times, to outline inconsistencies, or to bring a bit of reality back to the situation. If your client's currently got a turnover of $2.5 million and they're talking about it going to $40 million next year, I think you need a bit of reality brought into the discussion. So how about perhaps we move from 2.5 million to 4 million, and then the following year you might be able to move up to 7 or 8 million, with an ultimate aim in 4 years' time of being $10 million. That's probably achievable. Now, I know some businesses do have spurts and they'll go very fast. And if you've got one of those, well, you'll be preparing a number of business plans, because every time they go in that growth spurt, they will need an update to their business plan. The next area that's very important then is the financial interpretation of that business plan. Because the business plan is a document, looks nice, looks good, it should be reviewed each month. There should have been an action plan in it, which is detailed who's responsible to do various things and when they are going to be done by. But it doesn't really give the key financial information that's going to be needed. So the predictive financial accounts, which comprise the budgets for each individual business operation, is my definite preference, not doing a consolidation. So if your client's got 4 separate business activities, my strong suggestion is that you prepare the budgets for each separate operation. Why? It's going to be very beneficial to you when you need to analyze the performance, trying to find out what went wrong. Something's gone wrong in the overall result that's shown in the consolidated P&L. Trying to find out where that problem's occurred can be a big task. I've had some experience in doing those sort of analysis, and it can be very challenging. I was involved in one organisation at one stage. I was asked to go in to analyse it, that had about 18 different business units. And they knew they had 18 business units, but they were using one profit and loss account. And one of the key advisors was the external accountant that was advising this firm, but he told me very clearly he was not going to do the analysis. He said, I'm too closely involved. I'm interested to see what you come up with. Well, the first thing I said to him, why haven't we got 18 P&Ls here for the separate businesses? And I don't think I ever got an answer. We went through it and spent a fair bit of time analysing what had happened. And then we by repositioning. Thankfully, the internal bookkeeper had kept the sales figures separate. So that lady had an awareness that this should have all been shown separately, because the turnover of this business was over $20 million, and they had a couple of very big operations. And what we found was there'd been a change, which I won't go through now. There'd been a change in the operations of one of the activities, the biggest activity. And there'd been a change in, there was a freight transport business. There'd been a change in the route the trucks were taking because of a bridge being ruled out for certain size trucks by the Main Roads Department. But no one had told management, apparently, it turned out. And this had gone on for 8 or 9 months. This business had about 14 trucks on the road doing that same route, and it worked out an extra 380 kilometres per journey per truck that had been added because a particular bridge was out of action. Now, if that business had been preparing 18 profit and loss accounts each month, and they were doing monthly accounting, they wouldn't have been sitting there scratching their heads trying to work out what went wrong. It was staring them in the face when we reconstructed the accounts. So that's the reason I'm so emphatic about suggesting to you that the budgets should always be prepared on the individual business operations. We then have key drivers. Key drivers get hidden in a lot of budgets and cash flow forecasts, I notice. So what's in the key drivers? Well, it's things like capital expenditure, research and development expenditure, the debtors balance, the creditors balance, work in progress balance. These figures need to be closely evaluated each month, because out of debtors, we want to know the debtors days outstanding. So if your client's debtors days outstanding are currently sitting at 43 days, I think it's a bit silly if a budget's been prepared and it's going to be 30 days. There's no practical way they'll get it down, especially if they've been in operation for a number of years, or they're going to be really changing some things to get it down. So we need to think about this. The cash flow forecast. Now, the cash flow forecast is a vital document, because I'd suggest you should be looking forward. What problems are likely to occur in 6, 8, 12 months or into the next 12 months? What changes? And therefore, what thinking should be started now as to what the business is going to do about that problem of not having enough money? Can they borrow money? Have they got a will to want to borrow more money, pay interest, pay principal payments? Or are they looking to do something alternatively, which could be to go to the market to try to raise capital, crowdsource funding, equity raising, an early stage innovation company have been with us now for about 8 years and are still only scratching the surface, in my opinion, even though over $400 million has been raised in Australia by SME companies from Australian investors. But we're still only at the very beginning. And the projected balance sheet. Well, I like projected balance sheets because that allows you, and allows me when I'm working on one, to be the storyteller, to sit down with the client and say, now, if we achieve this with these various operations, you've got 4 operating entities. Here's their budgets. Here's their turnovers. Here's their cost to operate. Are you happy that's achievable? This is the investment we envisage in debtors and inventory and work in progress. We're going to undertake a couple of research and development projects. You've covered all that in your business plan. This is what your projected balance sheet's going to be looking like in 1, 2, 3 years' time. I think it's a bit dangerous in SMEs to go much further than 3 years. But this is the position. Sit them down and take them through it. Talk in their language. Don't highbrow them with accounting jargon and terminology. Talk, let them understand. Because by this stage, they should have real confidence in you, because you've worked with them to develop the business plan. You've then developed this document called predictive accounting reports, and you're now sitting down going through with them because the leadership team need to grasp this information. Whether they're SMEs or part of a public company. I found it in a public company. We had to spell it all out for the leadership team to fully understand things and to appreciate something a bit beyond what their internal responsibilities were, to understand how it all fit together, a bit like a jigsaw puzzle. So the projected balance sheet is a very important document. And I think what this is clearly highlighting, that if we're going to introduce systems to be the key business advisors to SMEs, we have to be thinking in the future all the time, not being known as an historian, a recorder of past events. Now, I know someone's got to do that, and that's necessary, but that's what tax returns are based on. But your client, the CEO, should not really be worried about any of that. He or she is thinking about the future, and they need you to communicate with. I used to call them the what if questions. I would get them every day, sometimes virtually all day, from the CEO or from some of the other senior leadership team people in a public company environment. Now, if I could cop what if type questions or discussions about where we were at, that at the minimum went for 1 to 2 hours a day, and some days went for 10 hours, and sometimes started at a 3 a.m. phone call. Who does your SME client go to for those discussions, for that overview? Oh, I couldn't sleep last night. I woke up worrying about such and such. It might be a costing exercise. It might be, could we do something as an alternative basis? If I get a tradie to sit down with you and sketch out what he's going to do, can you do a costing exercise on it? Those type of questions are just as important. In fact, I would argue they are more important for an SME CEO to get some input on than what they are for a public company CEO. Why? Well, the public company I was with, there were 12 members of the leadership team. I was one of them, but the others were people who knew a lot about the internal operations of the business. I was the outsider, really. I'd been brought in as an accountant. I had to learn the industry. The people who were already in it knew the industry or knew their parts of the industry, but I had to try to find out other information for them at times and bring it all together, do the costings, do the projections, play with percentages. Who does your SME client make those phone calls? Do you get them? Do you get them at present? I'd really be interested in knowing, because I've never struck any accountants advising SMEs who say, yeah, we get regular calls from XYZ client. But I'm sure they've all got the questions, because when I talk to SMEs, they tell me, oh, yeah, we don't know who to turn to. I mean, why don't you go to your accountant? And the answer I have heard dozens of times is, oh, no, they're too busy doing tax returns. If we don't supply this type of service to SMEs, I think some other group may emerge to offer that service. And I think we'll regret that as a profession. The 52-week business enhancement system that we are promoting is a concept of saying businesses operate 365 days of the year. Now, I know there's some public holidays and there's annual leave, but we can bring it back up. But they operate 52 weeks, because even if you have a shutdown for a seasonal end sort of thing, there's normally repairs and maintenance and modifications going on in that time. So there's still money being spent. So I think we need to make sure that there are daily, weekly, monthly systems installed to help the client better understand it. And this is a change of emphasis from traditional accounting firms. Now, I was the senior partner in a traditional accounting firm, although we always tried to deliver advanced services to SMEs. but we were still a traditional accounting firm, and the tax returns were very important. And there were some clients, I regret to say, that I really only spoke to once or twice a year. What I'm suggesting to you, though, is a new approach and saying, well, we need to make sure there is a daily system. Now, the daily system might be just a report that's produced by an internal person, but you've shown them how to do it. You've set the system up, the model up, and they distribute it. And it might have yesterday's sales, yesterday's gross profit percentage, yesterday's number of customers, the bank balance, the debtors balance. What are the big bills that are going to get paid this week? Goes to the leadership team. What it's doing is giving them an immediate alert. This is our position as of today. Not 6 months ago when the financial year ended. We're now getting our financial accounts brought to us. This is real time. Yesterday, bang, these are the figures. And then weekly. Weekly is very important. In fact, I think the emphasis on weekly is very, very important for you to look at, because we believe that the weekly performance and profitability report for every one of those business units. So if your client's got 4 of them, 4 weekly reports. If they got 20, well, it's 20 of them. If they got 500, which the company I was with had, you got 500 of them, because you're trying to isolate if there was a problem, if someone performed different to what the expectation was. The gross profit expectation was a GP percentage of 38%, and all that's been achieved is 22%. Why? What went wrong? That's the question that the big end of town asks their business operators. I think it's the question that SMEs should be asking, and you should be ensuring that they can ask that question and then helping supply the answer. What went wrong? It could have been a mathematical error. Okay, we'll fix that. It won't happen again. It could have been fraud. Great, you found it before it keeps on going. It could have been a complete misunderstanding of what the process was. Whatever it is, it gets fixed. Because what happens at present if you're just handling the affairs on an annual basis? That problem could continue for the whole 52 weeks, couldn't it? And then fast forward another, 20, 25, 30 weeks before you get round to doing the 30th of June accounts. There's a lot of problems can occur there. And monthly, well, the key role of the monthly is to get the monthly profit and loss accounts, to compare to the budget estimates, to have the key performance indicators and business metrics prepared so that the very important management accounting information is flowing back to the leadership team. And one of the other big things we want to achieve out of that is that there's a reconciliation between what the 4 or 5 weeks of the month weekly reports have indicated as compared to the monthly financial accounts. Because from my experience, one of the big things that the CEO will want to know at the end of every month is that the monthly accounts have proved the weeklies were accurate. Because what you should be aiming to achieve is that the management team, the leadership team, accept the accuracy of the weekly estimates, so that if you go to them and say, we expected 38%, we've only got 22% GP percentage, that they immediately react to fix it. What happens in your clients at present? Are they getting that type of input? Fiscal management issues are very important. The report prepared about 14 months ago now by MYOB and was published in the Financial Review in February 2024 indicated some real problems with suppliers. SMEs assuming that their suppliers would automatically give them 30 days account. They weren't even customers with those suppliers when they made that decision. Instead of getting on the telephone, getting on the computer and confirming the arrangements and hopefully negotiating 30-day payment terms, a significant number of them found that when they placed the order, they had to place the money into the bank account of the supplier. Well, that soon played havoc with their budgets and cash flow forecasts that they'd prepared. Debtors were another area where there seemed to have been an assumption that Credit had to be supplied to anyone who asked for it. There was no process for getting debtors to apply for an account so that there could be some checks made to see whether this was an honourable business or were they just getting someone else's problem. And there seemed to be no appreciation of the need to know debtors' days outstanding, at least monthly, what that figure was, to monitor it. If the budget had been done on 40 days average and it was now sitting on 52 days, what was being done to get it back down? Because that's going to blow out the cash flow forecast. And payments to the Australian Taxation Office, according to the MYOB survey, were forgotten about. The tax deducted from employees' wages, the superannuation and the net balance on GST just wasn't getting paid. And we all know the tax office are not the lenient organisation they were during the COVID period. They're now under instructions from the federal government to get money in. And I can understand that with the debt the federal government's got. So your clients need to understand that these things need to be paid. In our system, we have some material on the characteristics of a well-run business. So a well-run business has a rhythm of meetings, daily, weekly, monthly, where they're reviewing information. It has this concept of weekly performance reports and analysing them and fixing the problems. It has this concept of monthly financial accounts. Maybe they've got a board of advice or even a couple of external directors. It's a good idea to take your clients through these characteristics. Within ESS BIZTOOLS, we've developed calculators for the calculation of charge-out rates for tradies, for professional service firms, and for slightly different for retailers and wholesalers, whereby we look at the product mix, the markups, and the overall aim in those three exercises is trying to ensure that the charging for goods and services at various product levels and markups, the charging out of tradies for their team members working, their productivity percentages, etc., will give them enough money to achieve their profit targets. We've got one accountancy firm that tells me now they've got 120 tradie clients using that system. When they started with us, they had 20 tradies. They'd heard we had a calculator. They now use it. They're generating $8,000 to $10,000 per client over and above the cost of the tax return, which they're still getting charged. So they've created $1 million niche market on tradies. How many tradie clients have you got? Have you sat down and talked to them about their charge-out rate determinations? You could become an expert in some of their situations. There's thousands of tradies in Australia. Now, some of them very well-run businesses. You've only got to look at the results and look at their houses to understand that they're very well-run. But there's, I suspect, thousands who are not in that category. So they're the, how do you calculate those charge-outs? Research and development. A serious question. Do you help your clients with research and development? In ESS BIZTOOLS, we've developed a research and development introductory package, which is within every product package that we sell. And we have the full research and development package, which is only available in our financial forecasting package. But the whole idea is there are a lot of SMEs. According to the tax office in Oz Industry, thousands of SMEs undertake research and development. I always find that very surprising, to be honest, because I continually ask accountants whether they give advice on research and development or help their clients with research and development. And I don't get many yeses. I suspect what happens is those SMEs either give it away or they end up going to larger accounting firms, Big Four firms, top 100 firms. Now, we've got some of the top 100 firms using our packages, I think, for the research and development function. But in all seriousness, if accountants are going to be providing a service to SME market, shouldn't we be supplying all of the services that that market needs? And SMEs is one of those products that they need advice on. Our introductory package is basically there so that you can answer questions from a client. A client comes into you and says, what do you know about research and development? Because one of my competitors, I heard him bragging in the pub the other night, he's got a grant, he reckons, from someone for research and development. Can't I get one of those? I'm sure we've all had those types of comments on various things over the years. But how do you answer them? Well, our system is you'd click to your screen, you'd bring in research and development introduction up on your screen, and you'd be able to say to him, well, Jimmy, the first step is you're going to have to become a company because you're currently a partnership and you've got to be a company to get that benefit. Second thing is you've got to spend more than $20,000 on legitimate research and development activities in the financial year. Okay. And the next one might be, and we need to identify whether someone has already patented your concept somewhere in the world. How do we do that? Well, we've got the response to that as to how you might answer those questions. And there's natural disasters around Australia. They happen every year, don't they? We have floods, we have bushfires, we have cyclones. And seems to be more, we have some earth tremors at times and other things. Plus, we also have problems where a major business unfortunately fails, and that closing down, that failure can also affect a lot of SMEs. So we have a survival in difficult times package, which is a standalone package that you can use with your clients to help them try to see some pathways through these sorts of traumas. So I think accountancy firms need to move from the compliance workhorse to the trusted advisor, just as the former tax commissioner was suggesting. This will help you achieve higher client satisfaction. It will achieve longer-term relationships. It will definitely improve your talent attraction and retention, which I know from talking to accountants all over Australia is one of the most significant issues that many people have. And it will diversify your firm's income structure because you will be reducing that percentage of reliance on taxation. So why implement advisory services? I hope I've given you a lot of the reasons, what we've been talking about. The work is more meaningful for your clients. It will assist them to improve their performance. It's more engaging for everyone within your firm because there are different challenges. It allows your team members to contribute to real business outcomes. And your firm will be guiding clients on development of strategies to meet future challenges, not just the recording of historical records. And it will help you differentiate your firm in a crowded marketplace. Most accountancy firms look the same. I spend some time every month just going through looking at accountancy firm websites. It's an interesting exercise. Why don't you do it for an hour and try to work out how you're going to differentiate your services? And some firms, when I ring them and I start wanting to talk to them about what they may have had on their website, and research and development was one recently, and the response I got, oh, well, no, we just thought we'd put that there to see if anyone was interested. So they weren't really offering that service. So I wondered how many other services that they had listed they were not offering. They were just trying to see if anyone was interested. I don't think that's a good model. You can future-proof your business model as compliance work continues to decline. Obviously, I'm accepting what Chris Jordan had to say about the changes going on within the tax office. It's going to decrease the amount of work that accountants are going to have to do with the tax office. And I'm also looking at what Adam Withersham had to say and saying, well, this gentleman has really achieved some goals since he retired from being a principal of a sole practitioner accounting firm in 1999. And he now operates a business that seems to operate around the world. Your clients want to build stronger, smarter, more sustainable businesses. You can help them by starting now. There's a real movement in Australia on scaling up. I went to my first scaling up conference about 5 years ago, and it was fantastic. But in Australia, it was only just starting. It's been going in America for probably around 10 years. Been some interesting concepts as to what scaling up means. There are businesses out there who are wanting to scale up, wanting to grow, but they need assistance. They need strong management accounting information. Are you going to supply it to them? So where do you start? You're sitting there saying, I think we'll have a good look at this. I'd like you to log on to our website, www.essbiztools.com.au, and click on packages and pricing. We have changed our packages around. We've got 3 packages. We've got the starter packages, which is where if someone had basically never offered advisory services before, or a bookkeeping firm that's looking to start offering some concept of advisory services, that's where I'd suggest you go to. Although having said that, we have bookkeepers who are subscribing to our financial forecasting package. They're normally firms run by qualified accountants who have got the required skill level. The advanced package is the package that will give an accounting firm a whole range of information to start working with. And the financial forecasting package covers everything and incorporates the whole role of being the virtual chief financial officer. We back that up with a training program. We deliver training packages throughout the year. Each category of membership has 10 hours, 10 one-hour sessions of training offered during the year. And our subscribers can go to any of the training packages presentations if they wish. We produce a monthly newsletter called Business Plus that acts as a marketing tool to communicate to your clients on issues that they might find interesting. In each edition, we have 4 to 6 articles. I make sure they are grouped for various categories of people. They're not all on one subject matter. We break it down. We're looking at supplying information for people starting a business, for people who've been in business for a year, for people who are wanting to scale up, for people who are looking at succession planning issues, for people who are interested in really undertaking a research and development project and they'll need extra money. So we're looking at perhaps early stage innovation company, if they're only a young company, or if they're a more mature company, as long as the turnover is under $20 million, we're looking at crowdsource funding, equity raising. Now, these are the services that I believe should be standard delivery by accountancy firms servicing the SME market in Australia and New Zealand, and probably in other countries of the world also. This is the situation. So select the package that suits your firm's requirements. If you would like to have a one-on-one, one being me, but one from you could be all your partners or even your whole team. I've had a couple of situations where I'm told there were 40 to 50 people in the room in some of the larger firms. So some of the questions were interesting. I'm quite happy to do that. Send me a email, please, peter@essbiztools.com.au, and we will set up a time that's convenient to you and fits in with my calendar for a 40-minute complimentary Zoom meeting. You can tell me a bit about your firm, your aspirations, who your clients are, what your accounting team is. And I will give you an outline of which package I think would suit your requirements. So I look forward to hearing from you so you can start your advisory services journey. which will transform your firm and help your SMEs to thrive. And I really believe helping the SMEs to thrive is a very, very important component of that strategy. So thank you very much. And I hope that you will get back to me. And those of you who are watching this either on the link through social media or who are watching this at a later time, if you have any questions, can you please send them through to me? Peter@essbiztools.com.au. Thank you.